we have Jennifer Hernandez joining us. Jennifer is a senior loan officer for Legacy Mutual Mortgage. She has over 25 years of experience, 4,000 loans closed, and in 2018 and 2019, she actually won Houston's Mortgage Lender of the Year. So, Jennifer, thank you so much for joining us today. The floor is yours. Go ahead and take it away.
Thank you so much. So wanted to just thank you all for being here. This is what I'm going to go over today. So I'm going to share with you my YouTube channel. Those are some great resources for you. So I wanted to start with that. Loan with Jen is how you can reach me. That's all my handles on social media, and my website, Loan with Jen, as well. So I think most of the audience is realtors, so I'm assuming that use this channel as a hub. I have over 200 videos. I release 2 more per week of anything having to do with home buying. I have lots of playlists you can navigate around. We've also got some business tips as well. So hopefully you will use that as a resource, Loan with Jen on YouTube. So what I'm going to talk about today, a couple brief things, and then I'll allow some good time for questions. I'm going to go for about 10 minutes, and that'll leave about 10 minutes for some questions. So we have a total of 20 minutes together. How to vet your buyer. I think this is super important, whether you're a newer realtor or a seasoned realtor. The biggest thing that we get, not the biggest thing, but I'll say something that I think frustrates the clients, and we want to always make sure we, I don't want to say turn them down lovingly, but we want to give them some homework and give them a path and be positive about it. But we get a lot of calls where they probably could have had maybe a simple vetting out from the realtor to know a little bit more, to either give us a heads up or to coach the client along a little bit better. So I wanted to give you all some talking points of just some simple things that you can ask the buyers to make sure also that they're in the right place. Like maybe what we have is not the best fit for them. There's specialized lenders out there that there's some borrowers that just always will need private money, or they have a TIN number, which is tax identification number, for example. We don't do those. So have a list of maybe a few different lenders that do some special things, so that when you hear these keywords from your buyers and sellers, then you can navigate them, because we want them to have success when they call somewhere. It's as an originator, so I've done this for 25 years, and actually this last year I surpassed 4,000 loans, which I'm super proud of. So I've talked to a lot of people. It pains my heart every time I have to tell someone that I can't help them. I mean, I love to help everybody, right? But sometimes you can't help them right away. So we want to get them in the right place quicker. So ask them their timeline. I think that's the thing that I start off with, is to know, are they super, super hot and we got to drop everything and help them right away? Or do we have a few months and, we want to get them on the calendar appropriately? And then also you can give the lender a heads up as well. It helps us to know the client's timeline. The next thing is, have they talked to a lender? Super important to know. Gives you a clue as to their temperature also, because if someone is really frustrated, we get some calls from clients that we're like the second or third lender, and they're like at their wits' end, frustrated. Let us know that. Give us a heads up if you can, because it just, I want to gently try to get to the crux of the problem really quickly, because they've obviously been having trouble somewhere else. It also can maybe be a red flag for you that if 2 or 3 lenders have said no to them, I would don't start showing someone houses. I don't think you ever should, is my personal opinion, but really make sure that they're vetted really well before you start showing them properties. It just deflates them later on. They get super excited about a property that they can't do anything about. So make sure they get to a lender quickly. So have you talked to a lender, Mr. and Mrs. Homebuyer? How much money do they have saved? That's important to know, because then if the lender that you're referring them to does or does not handle down payment assistance. So here at Legacy Mutual, myself and my team, we do help people with down payment assistance. There's 3 to 4 different state programs. It's not federal. A lot of people say, oh, the government has this help. It is the government. I mean, it's state government, but the federal flushes funds downward to the state level, to the community housing development. And that's where you might hear the acronyms TDHCA, TSAC. There is a City of Houston program. It's kind of a nightmare, but it's there. They have to buy in the city limits. There's some restrictions. I'm not going to talk about that in this talk, but you can ping me on the side. But it's good to know who does what, so that if they don't have a lot of money saved and you know they're going to need assistance, you can make sure and shuffle them to the right lender that you've got on your list that does that. Okay, because not all lenders are offering assistance right now. Some choose to not offer it, and some just aren't authorized, or they're not approved with the state, because you do have to go through a vetting process as a lender. The next is, do they have an idea of their credit score? I'm going to really talk about this for a second. This is the number one. If I got paid $1 for every minute that I spend talking to people about their credit, I would probably be Bill Gates right now. Like, I would have a gazillion. I'd have so much money. That's the number one. So please visit my credit videos on my YouTube channel. It will serve you well. I've got some really simple laid out. The main thing for you to know, because this will help you help us for your borrower to have just a better experience. The score that they think that they have is a score, but did you know there's over 25 different formulas for credit? 25. There might even be more. All lenders that are conventional lenders or FHA, so any conventional FHA lenders, we have to use the same model of credit. We have to. That's how we can sell loans between each other. It's a commodity, right? We know that the criteria is the same. And it is vastly different than Credit Karma, Equifax. Everyone calls me and says, oh yeah, I know my credit score. And they do know their credit score according to that model, but it's different than the mortgage company model. So use my videos, have it in your toolkit, send it to them so that they just know what to expect, because it is difficult, and we really have to tread it lightly when a client tells us, oh yeah, my score is 750, which is a very good score, and then we pull it and it's 710, and their PMI is double what it normally would be, private mortgage insurance, because of their credit score. So it's a very touchy subject. Everybody is obsessed with their credit score. It is the number one thing that people know or think they know the most about. Everyone's checking it, because everyone's credit card, everyone's stuff out there is saying, let me give you your credit score. Let me give you your credit score. So it would be great for you to watch the videos that I've got on Loan with Jen on YouTube, because you're going to educate yourself, and it just gives you some talking points, and it's going to help you get them to the lender quicker, just to make sure that they're in the right spot. So on the credit, the biggest thing that we see is the score. I think you guys probably heard that, but coach them to get to a lender quickly, because we can give them homework if their score isn't where it needs to be. We want to get them in the right place. So that's another talking point to why get them to a lender. I think 6 to 8 months is perfect to start coaching someone on their credit and getting them to a lender. Because if you refer them right when they're under contract, there's no time to make any kind of movements on credit at all. So the last couple of questions, of course, asking them, hey, what's your budget for a monthly payment? So I kind of use the 1% rule, but now that rates are so low, like for example, if they're buying a house of $250, it used to be years ago when rates were in the 5s and 6s, that's about a $2,500 payment. Well, it's not anymore. It's much lower than that. So just to kind of know, and again, when I talk to them, I'll get them to the price really, really quickly. But 2,500 it's probably like a 75% formula, like whatever the price of the house is. If they're putting a low down payment, it's about 75% of that price. 0.75% is the payment. So anyway, just asking them just to know, it kind of helps you understand what kind of range they might be in. And then the last thing that I think is really important to make sure that you're asking, and this is just a sales tool, Do you have any concerns about the process? That is going to let you know, have they gone to a lender before and had a bad experience? Did they have a prior realtor and have a bad experience? It's going to help you know what the concerns are about the process. It's going to just help you get them to the next stage quicker. So this is my guidance for you on some really good questions to be the best realtor that you can be with your buyers, and really listen. I think the more we listen, our clients are going to be more tuned to us, and more, you know, we want them to feel welcome and that you're approachable. And these are just some questions that have served me really well in the past. Now, the last thing I'm going to go over, I've spent a couple minutes on this, and then I know there's going to be questions about it.
I'm gonna go ahead and hop on some. This part, Jennifer and I, we talked about it, and we've worked together on multiple occasions over the years at live events and on referrals that we've sent, and being an agent and investor. So yesterday we were talking about rental financing being an invested event, or being an event for real estate investors that are also agents. One thing with rental financing, and my presentation, I'm gonna go over this later on, and that is, you can go to Jennifer and get conventional financing when you get a rental property up front. You can absolutely do that, but you're going to have to pay a higher percentage down payment. There's nothing wrong with that. You get a super cheap rate, and it should cash flow very, very well. So that's the good thing. But you can refinance the property, and you don't necessarily have to deal with the same type of down payments. I see Jennifer, she's coming back online. So Jennifer, we were talking about the difference between a refinance and just buying a property up front for like a rental property. And I was drawing out the illustration of, hey, if I go out and buy a rental property and I say, hey, Jennifer, I got this deal, I'm going to buy it, fund it. How much am I looking to put down?
If you purchase it conventionally on the get-go, minimum 20% down.
All right, so we're at 20% down, which is fine. You know, if you got a lot of cash, that's okay. For most people, you're going to run out of cash. Eventually, you'll run out of cash. Now, if I go out and use some type of investor or private financing and buy this property at, say, 75% of its value, and then so if it was worth $100,000, just to keep it simple, I buy it for 75. My loan is 75,000, and then I go to you and say, hey, can I just refinance my loan? Like I don't need any money, I don't need cash out. I just want to refinance it. How much would you be able to refinance it now?
So we can refinance a rate and term refi up to 80% rate and term, no cash out. We can roll in the closing costs and the payoff up to 80%. Better rates are at 75, but you could do up to 80. And then cash out, and that's immediate, by the way. There's no seasoning. You could do it a couple months after you purchase. Now on a cash out, let's say you do the hard money or do whatever you do, and there's a lot more value, and you're like, hey, I want to get some more.
Hey, we told y'all there could be technical glitches. That's just what happens when you deal with the internet. I think what she's going to say is, if you're doing a cash out loan, you can do that up to, she mentioned 80% loan to value. Then I believe the seasoning is about 6 months. So here's the strategy I tell folks to do. Like, if you want to keep your cash, go out and buy these rental properties or flips or whatever. Well, I guess mainly we're talking about rental properties. Go out and buy them. Just buy them using hard money, private financing, and then you can refinance with Jennifer, and she can refinance 100% of the loan up to 80% of its value. So if you bought it less than 80% of total value, then basically she can refinance 100% of it. The cool thing for you is now you have no money out of pocket, zero. Or even if you bump up because of closing costs and all that a little bit over the 80%, then very little out of pocket. How many deals can you buy now? Versus if you go out and just using conventional financing from the get-go, yeah, you'll save yourself some extra closing costs, but that 20% down, it adds up. And if you don't have a lot of cash, I mean, you get to do one deal, maybe 2 deals a year. versus unlimited, right? So that's a huge benefit, leveraging both the private and hard money type of financing, and then converting over to Jennifer, coming that way. But on the other side of it, vetting your buyers as flippers, and especially in a really hot market, vetting your buyers is so important, because like in this hot market where inventory is super, super, super low, and you've got like multiple offers or just tons of interest, and this offer comes in, like how, like, and it comes in at full asking price. Like, is that a good offer? I don't know. Maybe it is. But what is their financing like? Do you really want to take it off the market just because they offered you full price and they say that they've got 20% down, but we don't know anything about them really? Yeah, they have a pre-qualification letter. I mean, you can get one of those and pretty much from anyone. So knowing the lender and how they issue their pre-qualification letters, and what documents were submitted to get that, that's important. And Jennifer can help you with that. If you want to have her vet, and there's no obligation, I don't want to speak for her, but I don't think there's any obligation to use her, but you can have these buyers go and she'll vet them for you to make sure that you've got a strong buyer. Most importantly, you don't waste time, market time, in a hot market. So that's all I got. I'm sure she'll chime back in the comments, internet issues. We all get them. So thank you, Jennifer. Thank you, Legacy Mutual Mortgage, for everything y'all do.